Just now, Morgan Stanley disclosed how Tesla's price will soar to 15 times its present level. They've revealed a backdoor that Tesla may use to build on its iPhone moment and establish itself as the Apple of the auto industry. Adam Jonas of Morgan Stanley has made a significant move, upgrading them to overweight and increasing the price target from $250 to $400. His summary of the reasons he thinks Tesla may be in for a very long time is as follows. Dojo, the supercomputer that Tesla is developing, has the potential to increase the enterprise value of Tesla by up to $500 billion, in our opinion. A quicker rate of adoption in the mobility space, especially in the robotaxi and network services industries, will be how this is manifested. The auto sector has a lot of promise for software as a service, SaaS, not just for Tesla, but for all automakers. Not many people have really used it yet, by the way. Roughly 400,000 Tesla cars are equipped with fully autonomous driving technology. They do not possess that technology, but it does not imply that they are. Adam Jonas claims that the Dojo supercomputer could result in significantly cheaper expenses as they continue to improve it and employ the next generation of chips that Tesla is creating. One of the street's most vocal Tesla bulls, Adam Jonas, has continued to rate Tesla shares favorably and set high price targets for them. He brings something far more juicy this time. Today, we'll talk about the recent analysis on Tesla by Morgan Stanley and the reasons behind their prediction that the Dojo supercomputer might increase Tesla's market worth by up to $500 billion. You read correctly, $500 billion. Remember that this is just one aspect of the Tesla company that Morgan Stanley has disclosed. We're going to examine each of the intriguing money printing tactics that the American Investment Bank has disclosed for Tesla to consider. Thus, let's get started right now. I believe the corporation is shifting its focus to selling batteries, power electronics, charging infrastructure, and yes, FSD and autonomy, rather than perhaps producing as many cars as before. In any case, that is the true moneymaker. We believe that in this case, investors are somewhat blind to the bigger picture. That's extremely intriguing, Tom, because even in the UK, supercharging facilities are far more effective if I drive an electric car for a road trip. Then there are the other ones, where the lines are just endless. Thus, it is evident that there is a market for that kind of product. What does Tesla appear like, though? Give me 10 years to come for this business. Are we discussing a whole different animal? I believe that. Tesla is a chip developer. It will eventually be less expensive and might reach the auto industry's end goal of autonomous driving considerably sooner than anyone else. Three things are necessary for Tesla's valuation to rise, according to Jonas. First, avoiding more misses compared to Wall Street consensus estimates following multiple downgrades in the last year. Second, the successful introduction of new cars like the Cybertruck. And third, and most importantly, proving that Tesla is making progress in changing its business model to include more software licensing, services, and robotaxis. While Morgan Stanley believes that Tesla's dominance in the car industry is peaking, it also believes that new initiatives in the fields of energy storage goods, autonomous driving, and non-automotive licensing will be crucial for the company's future growth. Still, is it possible that they are correct? What should investors in Tesla be on the lookout for? Let's investigate. Welcome back to Tesla Tomorrow, everyone. According to a recent note from Morgan Stanley analyst Adam Jonas, Tesla's stock will rebound from its sharp decline, but first it needs to demonstrate that it can diversify into high-margin industries outside of auto production. Tesla's shares have dropped to about $220, and the company is currently trading at about 5 times 2024 profit estimates, compared to previous periods when it often achieved over 100 forward P/E ratios. However, Jonas asserts that until Tesla can transition to more sustainable, predictable, recurring software and service revenues, improved sentiment around the core auto company or short-term execution would not suffice. Morgan Stanley anticipates sustained pressure on Tesla's formerly record high automobile valuations. Before we continue, though, please make sure you press the like button, subscribe, and enable post notifications if you enjoy this kind of content. This will help you stay updated on all things Tesla. Tesla has to move closer to generating more capital-light income via licensing, services, and software. It will be necessary to do this by expanding its user base quickly and entering new markets outside point-of-sale vehicle sales. According to several experts, Tesla's Q3 results failed on almost every indicator, dealing a serious blow to the bulls. As a result, it will likely require a major effort from the EV manufacturer for sentiment to turn around. As of right now, Tesla is still very focused on the one-time sale of cars, which results in a high capital intensity. However, Adam Jonas claims that this marketplace centered around Tesla's products, much to the App Store, may be able to provide steady high-margin income. According to Morgan Stanley, the number of monthly active Tesla users might increase tenfold from the current 5 million to 50 million by the early 2030s. The company also believes that Tesla's Dojo supercomputer has $500 billion in potential. The possible profits from Tesla's supercomputer have been mentioned by Morgan Stanley previously. Prior to this, Tesla's stock price spiked to its highest level in more than a month after Morgan Stanley upgraded the company and highlighted potential Dojo revenue. Morgan Stanley believes that this company can support a valuation for Tesla that is higher than $1 trillion. Morgan Stanley believes that Dojo, Tesla's artificial intelligence network that uses video footage to teach self-driving cars, has the potential to take the company beyond car sales and into the very profitable software services sector. It will make neural net training, which is necessary for creating AIs, faster and less expensive. With the help of the supercomputer, Tesla will be able to utilize its real-world data set, which includes road scenarios, depth and velocity information, and billions of item classifications. Over the course of around 5 years, Tesla's in-house supercomputer, Dojo, has been developed. It is intended to teach AI systems how to carry out difficult jobs like supporting driver assistance features like autopilot and turning on FSD. Dojo is predicted to have processing speeds of more than 1 exaflop, or 1 quintillion calculations per second, making it one of the most potent supercomputers in existence. At 442 petaflops, or 442 quadrillion calculations per second, that is quicker than the fastest supercomputer in the world today. Dojo, however, is a software platform that enables Tesla to take advantage of its enormous data edge rather than just a hardware initiative. Dojo isn't just for Tesla, according to Morgan Stanley. It is asserted that by making its supercomputer and AI capabilities available to other businesses and sectors, the project can also help Tesla generate new revenue sources. The investment firm contrasts Dojo with Amazon Web Services, AWS, the company's cloud computing branch, which has grown to be a significant source of revenue and expansion for the massive online retailer. Additionally, according to Morgan Stanley's calculations, Dojo might bring in up to $15 billion in revenue annually for Tesla by 2030, and possibly much more in the long run. Dojo is the kind of project that could enable Tesla to routinely meet its financial goals. Expanding the range of Tesla vehicles beyond the Model S, X, 3, and Y is one of the other tactics. The introduction of the Cybertruck, Model 2, and robotaxis could be the catalyst for this. According to Jonas, it is important to consider the possible effects on sentiment that a vehicle introduction such as the Cybertruck could have. Furthermore, a larger portion of Jonas' optimistic thesis for Tesla is based on the company's ability to go beyond its primary role as an automaker. The analyst added that throughout the following 6 to 12 months, his company would be searching for additional proof of the business model's viability and will be examining capital-light projects such as software and licensing, which have applications outside of the automotive industry. This section also touches on Jonas's view that Tesla can project its present multiple by providing a solid connection to the artificial intelligence issue. According to Jonas, the achievement of one or more of the aforementioned goals by Tesla is ultimately what will drive the stock higher. Additionally, he stated that although investors are unlikely to accept any more revisions to earnings and free cash flow predictions without further compressing the multiple, they would demonstrate a willingness to believe in the long-term addressable market for Tesla and the company's profit potential. Overall, Morgan Stanley thinks that Tesla is a tech firm as well as an automotive, and that once its initiatives are commercialized, it will soon fully achieve this status. How do you see this affecting Tesla's future? Do you share